Welcome to this evening's edition of Let's Talk About It, a bi-weekly discussion on a topic and how it affects the Black community economically. This discussion is sponsored by the CPIN, the Closed Private Investment Network, which is operated by the BNIC network. So, as always, we are going to start with our disclaimer, which reads that the information in this discussion is strictly for educational purposes only. We strongly encourage participants to consult with licensed financial advisors, attorneys, and tax professionals before making any significant financial decisions or investments. Though I do have more than 3 decades of business experience, I am not licensed or registered with any regulatory authority. And next, we will listen to an introductory video of tonight's topic.
Today, we're exploring how CPIN turns scattered capital into structured long-term wealth. Ever wonder why solo investors struggle so much? Surprisingly, the real problem isn't a lack of info. Instead, they're stuck watching endless content, making isolated choices, and totally missing out on coordinated group opportunities. We really need to shift from dopamine-driven speculation to structured, long-term group economics and shared intelligence. That's exactly why CPIN acts as true investment infrastructure, rather than just another passive networking group. In this network, you can't just buy your way in. Progression is strictly earned through active participation. You literally advance through 4 distinct tiers, completely based on your growing knowledge and sustained engagement. The whole goal is shifting you from purely educational content into active participation in the investor portal. Public discussions like "Let's Talk About It" aren't the final product. Honestly, they're basically your audition. But what about risk? Startups have massive upside, sure, but they also face huge operational failure rates. To fix this, CPIN actively manages risk through direct operational involvement instead of just blindly writing checks. The whole setup functions as a gated ecosystem, building real economic power through deep community coordination. So, are you a disciplined wealth builder ready to execute, or just a passive spectator chasing hype? Capital alone rarely wins. If money isn't enough to build successful companies, are you ready to execute?
All right. And with that, I will go over a short presentation. And tonight's topic is structured capital and engineered access, overcoming fragmented execution to build organized economic power in private markets. So the problem in the Black community is not one of information, it's one of coordination, right? So the information is out there, but we don't coordinate it well. So there's lots of videos and blog posts and websites out there that have financial content, but there's not an execution layer, right? And most of these websites will have you go on your own and try to implement strategies versus having a coordinated effort in learning about personal finance and investment strategies, and then investing alongside other like-minded people. So information is everywhere, capital is scattered, and coordination is missing. So let's talk about the wealth creation divide. So you have the public consumption trap versus the private ownership engine. So the public consumption trap means that you are encouraged to invest through the public markets, right? Typically the stock markets. You go through a brokerage account, you go through an app like Robinhood, you buy shares of stocks, or you may even invest through your 401k. But here's the thing. By the time that a company is public, you have traditionally missed most of the substantial valuation growth, and your participation is largely passive. You have very limited voting rights, and you've missed the main period of growth for the company. Now, private ownership, this is where the largest wealth creation happens in the private markets before companies go public. Now, this has been historically dominated exclusively by high net worth individuals, large institutions, requires high signal intelligence, and most importantly, access. So let's look at this graph, and we see it's a risk reward activation curve. And what it shows is the timeline for the growth of a company compared to its valuation and the risk factor. So risk is highest at the very beginning when you just have an idea. That's also when valuation is the lowest. And so as you move through the phases of a company going from idea to pre-seed, seed, and then series and growth, you see that the risk decreases. So as a company is in existence longer and it goes through these phases, it starts generating revenue. It starts proving that its business model works so that the risk of failure declines. At the same time, the valuation increases. And so this is where venture capital comes in. You won't find venture capital at the ideal pre-seed or even the seed round. They really start getting in around Series A and further because they are weighing the valuation versus the risk, and they want low risk, high valuation. Now, let's talk about access. And as there's different ways to access the private markets. You can be in angel investing, which is direct investing into founders. This is typically what's done at the pre-seed and seed rounds. The capital minimums are still pretty high. You're talking usually $25,000 plus. You typically are doing diligence on your own. Though, as an early angel investor, you do have a high operational influence, but your money is locked up for many years. It's very illiquid. And then we have crowdfunding, where the minimums are low, but there's not a lot of due diligence support through crowdfunding platforms. There's usually zero operational influence, but it is open to basically everybody. Then you have the venture capital funds. These are managed by professionals, where the capital minimums are extremely high, usually 100,000 plus in order to get into one of these funds. But again, these are run by professionals, so you have professional due diligence. Operational influence, you generally don't have it for limited partners, which is usually who the investors are in these funds, but the general partners, the professionals that are overseeing these funds, will typically have some level of operational influence. But accessibility, These are locked behind institutional walls, requiring you to be an accredited investor as well as high minimums. And then there's CPIN, right? Um, we provide the optimal synthesis of these different um, access avenues. So our capital minimums are low because we create structured vehicles that pull money together. And so our minimums are generally anywhere from $50 to $500, and then we pull enough money from enough people through a special purpose vehicle, which is the structured vehicle. It's a legal entity created just for that specific investment. And once we pool enough money, then we invest on behalf of the investors. Um, and then we're able to either do it through angel investing or through venture capital funds. The diligence support. This is community driven due diligence. So it starts with the BNIC vetting um, investment opportunities, going through and making sure that they meet investment criteria, that we've identified the risk. And one of the ways that we manage risk is through operational influence, which is where we will tend to have uh, active management associated with the investment. And we are setting it up to where we're going to have advisory boards among our investing members to where they can advise the BNIC network based on these different investments. Now, accessibility is earned. You have to be a member, and then you have to be an accredited member or a sophisticated member. Any member can become a sophisticated member by going through the educational courses that teach you about risk so that you know how to manage the risk associated with an investment. So accessibility is available to everyone, but you do have to go through some processes in order to earn accessibility. So now let's talk about the reality of early stage investing and the risk associated with it. Now, the hard truth is that most startups fail. They fail because of poor management. Um, Most of them are undercapitalized, which means they don't have enough money. Um, and the founders may be good at producing a product or service, but they generally don't have any experience when it comes to actually running a business. So the business generally has weak governance. And again, there's just poor management execution. So a startup can have a great idea and still fail operationally. So this is where the BNIC comes into play because we take an active role in the management of the investment opportunities that we present. Through our association with Help Keep My Money LLC, that company can provide fractional CFO services. And then the BNIC network um, provides general management consulting, making sure that the business has a scalable, profitable business model to where it can be cash flow positive within 2 years and can scale, hopefully, to become a unicorn. So, what we talk about engineered access. And so one of the things that CPIN does is it engineers asymmetric protection. So by having this capital allocation to where we pool people's money together along with operational oversight, we mitigate execution risk. And so this allows us to cherry pick investments that we believe will have a higher chance of success and are still in an early stage to where when you get in early, you have a better chance of making a highly profitable return on your investment. So CPIN is investment infrastructure. We're not a webinar. We're not a motivational group. We're not financial entertainment, and we're not a speculative day trading hub. We're a gated economic coordination network. Our mandates are to organize Black capital and the supporters of Black capital, to elevate financial intelligence through our knowledge center, to facilitate disciplined investing. Again, this is for the long term. We're not promoting day trading or any get rich quick schemes. But we do want to create access to vetted private deal flow, right? So that members just don't learn about money, but they operate inside a structured investment ecosystem. And so we have a value creation engine. So we have these high signal discussions, such as this one, and the Let's Talk About It discussions, where every 2 weeks we pick a topic that affects the Black community economically. We often discuss different investment strategies because we don't have the time to just put your money into an index fund and wait 30 years for it to compound. We need more aggressive strategies, the same type of strategies that the rich use, that because of technology are now available to the retail investor. But we want to pool our money together. We want to learn together, and that starts with high signal discussions. Then we have our knowledge center. So these are short video-based discussions. They're generally 5 to 10 minutes. They have a study guide, they have a presentation, and it allows you to learn at your speed. And we have over 40 different courses. We have vetted deal flow. This is where we do our due diligence in evaluating investment opportunities. We put together SPVs, special purpose vehicles. We allow you to pool your money with other people's money in order to invest with low minimum amounts. And then we deploy this capital, and it generates returns, and we start the cycle over again. So progression is earned, not purchased. We have 3 membership levels. So the first level, the observer level, is free. This is where we want to make sure that you're aligned with the CPIN philosophy of cooperative group economics. You have access to the Knowledge Center and the beginner level courses. You also have access to the Financial Independence Toolkit that teaches you how to calculate your financial independence number, helps you develop an asset accumulation plan. And then, of course, you have access to invitation to members only discussions, which we have from time to time. From there, the next level is the participant level. This is a paid level, and this unlocks full community access, AI-powered investment tools. You also get learning credits that you can use to access intermediate and advanced educational modules. And you get the AI-powered tools that help you to implement your individual plans. And then the ultimate level is to become an investor. This is where you are either a sophisticated or an accredited investor. and you invest in at least one investment opportunity, that unlocks the investor portal. It gives you all of the benefits of being a participant, but now it's free. So that's included with being an investor, and um, you get access to priority access to investment opportunities. You get the investment portal where you can track your investments. You get your contributions account and your distribution account. So your contributions account is where you put in money and then into your contributions account, and then you use that money to invest. And then as the investment creates profits and those profits are returned, it goes into your distribution account, at which time you can either move that money back over into your contribution account to reinvest, or you can withdraw it from the system totally. So this is where we are so far. We are still extremely young, but we've had over 90, almost $90,000 invested through our investment opportunities. We've distributed close to $47,000. We have 9 live opportunities, over 40 learning modules, and over 64 members. This is what's happening now, but we're a young network. And so I encourage each person to invite at least 2 other people to these Let's Talk About It discussions, so that hopefully they can apply to become a member. What CPIN is not for day traders, it's not for people looking for get rich quick schemes. It's not for purely passive speculators that are willing to execute and just want to look. Um, and it's not for individuals that are uncomfortable with accountability. It is for serious operators that want disciplined investment exposure, those who value structural intelligence over hype, believe in cooperative group economics. Inside our community, we practice cooperative group economics. It's not about maximizing the profit of one person, but it's about maximizing the benefit of the community. Now, when we interact outside of the community through the SPVs, then we're practicing pure capitalism. We're trying to maximize our profits in order to bring those profits back into the community, where then we can um, share them through our cooperative group economics. And we're looking for individuals who are ready to move beyond isolated decision making. So Let's Talk About It is really the audition where you get an idea of what CPIN is all about. We start with education. You get access to the Knowledge Center, and then you just attend a discussion where you're able to interact with other members, and then you can apply for membership. So with that, that concludes the presentation on structured capital and the importance of joining a network like the Closed Private Investment Network. And so with that, the floor is open for questions and comments. And I'm going to pick on Leroy because Leroy is a longer term member. He's a faithful attendee of these discussions. And Leroy, just want to hear about what your experience has been with CPIN so far.
My experience with CPIN has been one of great education, one of building trust being able to verify the information that's shared is good quality information, and now ready to roll out and to become a part of some of the offerings.
Amen. Amen. Leroy is about to partake in his first investment opportunity. Um, and we've got three new members who have joined, and so they're just getting exposed to CPEN. Um, and so, Leroy, what has been your interaction with the Knowledge Center? Can you give us a little testimony on that?
Yes, I have been able to take a number of courses, and through these courses, it has helped me to organize my thoughts and plans as far as my own financial situation right now and where it can get in the future, and having a good understanding of it so that I know in going in exactly what I'm looking for in reference to my future goals. So, and I am, I would say, more understanding of myself and my own finances and what I'm looking for. And uh, having been able to look back on with some of the past experiences of things that have made me uncomfortable, I feel like I have been able to, through the courses and all, feel a level of comfort and confidence through the CPIN network.
And Leroy also completed the essential lessons that are required for becoming a sophisticated investor. And so he holds that level of membership. And now that he's becoming an investor, um, he now holds that title also. So he's a sophisticated investor. Um, and Leroy, I want to thank you for your commitment to CPEN, and I hope that it's is able to support you in your investment endeavors.
Yeah, I would like to add one other thing. Going through the process of my first potential investment, the process of going through my past experience has been through other sources. Give me the money, give me the money, give me the money. I have found that CPN wanted to make sure that individuals knew exactly what they were doing and going through a process to make sure that individuals are clear before putting any money up. So I appreciate that.
Well, thank you. The BNIC considers itself first and foremost as risk managers. And so that's the perspective that we come from. Um, and we have two rules that we live by. The first one is don't lose money, and we don't want to lose clients' money. And so that's why we carefully vet our investment opportunities, and we make sure that they have sound business models where they have low risk of failure, high risk to succeed, and an above average return on an investor's investment. And the second rule is don't go to jail. And so we want to make sure that we are fully compliant with the SEC rules. And though we have created a infrastructure that allows the average person to invest in the types of private deals that are usually reserved for accredited investor and high net worth individuals, um, there are still specific rules and regulations that we have to abide by. And being a sophisticated investor is one of them. And so, though the SEC does not um, specify the criteria for being a sophisticated investor, it just defines what a sophisticated investor is. Someone who, through knowledge or experience, understands the risks associated with the investment. And so we developed a series of courses with a quiz at the end that teaches you about how to become financially independent, the importance of self-discipline, and how to invest. I mean, how to analyze an investment opportunity and understanding risk and understanding how to manage risk. We take it extremely seriously. Um, we also take seriously the requirement under which we provide these investment opportunities, which is the 4A2 private placement exemption. It requires us to have a substantive pre-existing relationship with the investor before we even present the opportunity. And so, again, the SEC does not give clear guidelines on what a pre-existing or substantive relationship is, but we can look back at examples, and we have created our application process and the intake form, and again, going through the education and verifying you're either an accredited investor or that you become a sophisticated investor in order to document that we have that substantive relationship with you before we present the details of the investment opportunities to you. And the most important thing is you have to be a member in order to get the details. We cannot advertise publicly the details of the investment opportunities that are offered only to members. So we take that very seriously. And we would rather grow slowly and purposely and legally than to cut corners, allow anybody in, and to violate the SEC rules. Because as good of risk managers as we are, there is no guarantee on any investment, but we want to make sure that we give you full disclosure on the risk and that you fully understand the risk, you understand how to manage the risk, so that if something does go wrong, and you happen to complain to the SEC that, hey, the CPIN is over there trying to swindle people out of money, we can show, nope, we're not. This is our process. This is the information that we provided. This is who we provide information to as far as investment opportunities. These are the requirements, and that we did everything that the SEC requires as far as disclosures. But our ultimate goal is for people not to lose money. And so we'd rather, review 100 investment opportunities and pass on 99 of them and just choose the right ones that fit our investment criteria. So we do have three new members, Robert, Sandra, and Williams. I know that you guys are relatively new and probably haven't had a chance to really interact with the platform yet, but I'm interested in hearing from each of you what motivated you to join the platform. And let's start with Sandra first. Sandra, what motivated you to join the CPIN platform?
Um, I can't think very clearly right now. I've been functioning on 3 a.m. 3 a.m. back to backs, but for the most part, community. I mean, I'm a licensed financial professional, and I really I'm a huge believer in us getting our financial house in order. And I always approach my calls and my meetings with folks talking about what your financial house looks like. And one of the things that I realized in our community is that we're not as good about finding real opportunities that are out there available to us. So it was very interesting to me when I came across this as a possibility for our community, right? That we can be able to sit at the table as well. Because many other communities are sitting at the table and bringing their people to the table. They're talking to their kids at the dinner table. And, what we're talking about is buying the next LeBrons and the next 75-inch TV. Like, that's what is going on at our dinner tables. So I loved the fact that I could come into a community of like-minded people who don't think I'm crazy by, saying, well, I can use my IRA to buy a property, for example. Like that goes over some people's head and they're like, okay, she's running a scam now. But you can have these conversations in a community where people are kind of like-minded and thinking about how can we build wealth in our community. And that's it.
All right. Thank you very much. Robert, you want to tell us what motivated you to become a member of CPEN?
Uh, Thanks for introducing me, Michael. Appreciate it. I would say the thing that really motivated me to want to be a part of something like this is really about the deal flow. I've grown up in a household where entrepreneurship and investing isn't frowned upon. It's encouraged. Um, and being in a place with like-minded people is definitely a great place to be in, but it also is a great place when you also are able to get connected into deal flow and uh, people who are good at managing and executing with investing and investments and in business. It's just great to have proximity, and it's also great to be able to have access to invest with that community and build wealth together.
Well, thank you. And we're happy to have you here. And we look forward to you completing the courses so you can become a sophisticated investor so you can get access to that deal flow that you mentioned. Williams, want to tell us what motivated you to become a member of CPEN? Williams, are you still there? Williams is actually our newest member. He joined today, um, and he's out of Nigeria, where it's almost 3 o'clock in the morning. So I want to recognize um, him for his commitment to jump on the discussion um, at such an early time. Um, and so, um, Williams, I do want to recognize that you're here, and I'm going to give you one final opportunity to say something. All right. Um, with that, um, we've talked about different subjects here and different topics and different strategies, and all of those are accessible through our Let's Talk About It website. And I'll actually put the link to the website in the chat so that the newest members can have access to the link. We record each session, and so you can go back and you can look at recorded sessions Um, we've been doing this now for about a year, and it's gone fast. Um, but I'd like to hear from you guys. What are some of the topics that you are interested in hearing discussions about over the next 6 months for the rest of this year?
I would like to have further conversations on AI and the role that AI is unfolding with reference to investments and the world. So our world is swiftly changing, and we will either change with change or we're going to be consumed by all that is going on around us and be lost. So I would love to hear more interactive conversations on AI in relationship to investments and opportunities.
Definitely, definitely. Um, AI is rapidly changing um, the way that we interact with each other, the way that we interact with businesses. Um, and it's moving at a rate of change that we've never seen before, we've never experienced. Um, and the tools available to us are extraordinary and they are rapidly changing. And what it's doing is it's putting intelligence in our hands. And so the question is, how do we use that intelligence? And but by the same token, it is creating um, a greater divide between the haves and the have-nots. And we want members of CPEN to be part of the haves. And so we will definitely be talking more about AI, how to use AI when it comes to investing. Um, and one of the strategies that I've recommended is investing heavily in technology companies, whether it's um, through private markets and some of the SPV, one of the SPVs that we have that targets technology private companies, or whether it's through the public companies and the Magnificent Seven and some of the semiconductor companies. And AI is more than just the frontier models of ChatGPT and Claude. There's a whole infrastructure that's associated with AI. And so we have had one conversation where we talked about that a little bit, but it doesn't hurt to have another one. So yeah, I definitely plan on more conversations about AI. Um, Robert, um, any um, topics that you would like for us to consider?
Um, I definitely like I definitely would like to talk about the tech space and uh, how venture capital has sort of like changed the way how they've sort of invested in tech companies, how they valued companies, how they've exited, um, deal structures and so forth, and how, we get involved, how we exit, and more around the lines of just, talking through how over time, how people have invested in companies and been able to build wealth over time. Just sort of looking at the different decades and sort of like going through chronological order as to how things have changed over time and then how investors have changed with the time, sophisticated investors, accredited investors. have changed over time, and in the next generation or the next chapter, how we will stay ahead or a part of the curve with the next cycle of wealth generation.
All right, we will definitely talk about um, technology investments, and we will look over the last 3 decades, the impact that investing in technology has had in creating wealth, and what are the opportunities going forward to continue that trend. So that's definitely one of the topics that we'll be discussing. Um, Sandra, I know that you're running low on brain energy, but any topics that you would like to see discussed here?
No, I think folks pretty much covered it. Like so much going on with AI, and you've said it. It's not even changing by the month or the week. It's just like you saw it this morning, shoot, this afternoon it's a whole different ball game with what's going on out there. So I think continuing to stay on top of AI and the relevance and how you're actually engaging with that as an investor, not just as a user, is definitely because there's money to be made and there's also going to be money to be lost. It's like it's a double-edged sword. So, staying relevant and on top of it, and you don't market time, but like you said, risk management, like my background is institutional compliance, and so staying ahead of it and being able to protect that gain that you made as you are engaging with AI, knowing that everything that goes up at some point is going to come down, and that mean and whatnot. So just staying on top of how that risk management works, and I like that you were talking about that. Um, just addressing that in the mix of things as well.
All right. So definitely, we're going to be, really focusing on AI. So I spend probably 2 to 3 hours per day um, researching and getting information about AI, whether it's daily newsletters or um, or podcasts or just videos in general. Um, a bulk, a large portion of my day is spent staying on top of what's happening in AI, and then another large part of it is actually implementing the new tools. And so this is where I spent a couple of months adding AI powered tools to the CPEN platform and vibe coding several complete platforms um, that are also AI powered. Um, and the tools just keep getting more powerful and easier to use. And so I'm going to be talking about how to use agentic AI in your daily life in order to um, uh, to use the intelligence more, right? And what it'll do is it'll give you an edge in life, period, and it'll give you the ability to do more in less time, and it'll give you back time so that you can spend time doing the things that you enjoy and that you love. Um, I heard someone say that we were not put on this earth to work. Work is the invention of capitalism. Um, we were meant to enjoy interaction with each other um, and to enjoy the resources of this world. Um, And we're at the point now where there's enough resources and enough knowledge that not one single person on this earth should be homeless, should be starving, um, should be without clothes, or going without the basic necessities. It's only because of greed and people hoarding abundant resources. Um, that is what is at the root of capitalism. And this is why we choose to practice cooperative group economics. But we run the fear of AI, which provides abundant intelligence. We run the risk of that also being hoarded by um, people with money and power. And so we've had to stay on top of what's available, and we have to stay on how we can implement this new life-changing tool in our life and in our communities in order to make our communities better. Um, with that, we are at an hour. I'll give Williams one last opportunity to interact with us. Um, Williams, are you still there? So you say, okay. Thanks for the message, Robert. I'll take a look at it. All right. With that, I want to thank everybody for spending the last hour um, with us together. And I invite you back in 2 weeks. And the thing that I ask of each of you is to invite at least two other people to join you. And so that's how we build this community is one person at a time. And with that, have a great night. Stay blessed and stay safe. Bye bye.